Charlie, whether you have an opinion or not about a Fed bailout, because a lot of our viewers were saying, why did we help bail out big financial companies? This is still a huge issue of whether in the future the Fed, the Treasury, will be able to dip their hands in the way they did.
If you notice, the former regulators are sort of, and then regulators now and in the past, like Paul Volcker, who was on Neil Cavuto's show today, they're circling the wagons. Do we have a shot of that?
Yeah, we do.
We should show what Paul Volcker said. It kind of mimics what Janet Yellen said.
Right. He's talking specifically in this soundbite about whether we should see a rate tightening.
Oh, is he? No, he should be talking about. He addressed today the bailouts, and what he said was this. It was at the spur of the moment. He believes they did everything accurate, and they did everything in the best interest of the American people and the taxpayer. That's a different argument, I would say, and that's essentially what Janet Yellen says. Then it's legal. And what these regulators have to realize is the courts are saying that their power, their immense powers that they flex during these times,
should be clipped.
It's clipped. They're saying it's illegal. That doesn't mean they won't do it again. But I am telling you, it's different to say we took all these protections because we were worried about the taxpayer, and the way we handled it comported with the U.S. Constitution and U.S. law. The judge clearly said it did not.
Michael Cox. Here's why Paul Volcker's voice matters, because when we had massive stagflation, just as President Ronald Reagan came into power, he fixed it by doing what? Tightening interest rates. Let's listen to what Paul Volcker told Neil Cavuto exclusively today. He is a giant when it comes to Federal Reserve chairs in the history here. Here's what he said, and then you can comment.
Look. At some point, rates are going to have to go up. I think that's inevitable. Everybody said that. If we have a good operating economy, you don't operate an economy on zero interest rates.
Okay, so, I'm guessing you agree with him.
Thank you. You would be right. Exactly. Look, this Fed does not understand that the economy is self-healing. It thinks that you can't get better without the Fed keeping interest rates low. Nothing, in my view, could be more wrong. We're in a vicious cycle. Banks won't lend until interest rates go up. Interest rates won't go up until the Fed decides so. The economy can't get stronger until the banks lend, and the banks won't lend as interest rates are up. So the Fed has to break the cycle and raise interest rates. We have a kind of redistributionist monetary policy going on to complement the redistributionist fiscal policy, keep interest rates low for the borrowers. Yes, it hurts the wealthy Americans with money to lend, but everything I've seen out of this entire administration for 7 years says it's going to be a one-way ticket downward on interest rates. There's no increase in interest rates. I find it very hard to believe we're going to get an increase in interest rates out of this group.
And you know what? Warren Buffett said the same thing. Not going to happen this year. Michael, I liked what you said, that we might not see one until after the election, which is 16, 17 months from now. So you and I will keep this conversation going. Thank you so much for joining us.